Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for CommunityFT members, in which we're going to take a look at some major movements to come and occur, or potential movements to occur over the next 24 hours. Now before we do that, at this point, if we can all embrace a quick risk warning. So if we can familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature, guys. Okay. On the cards for us this morning then, let's take a look at some economies, the well-being or performance of those economies as is represented by their currency and the value of their currency. And let's take a look then at some equities. So let's move to the platform now for an inspection. Okay, if you remember, we were recently talking, let me just bring the platform on, we were talking there about sterling, okay, and some fundamental news announcements or some economic data which would be fundamental analysis to affect the same. And these are figures to be released, or that were released today, relating to the gross domestic product, okay. Now, what we want to do though on this chart, okay, is analyze areas of support and resistance and perhaps get a gauge of supply and demand within the market from a kind of holistic level. Now, what we can see here is, okay, recently over time, there was a little bit of support, or resistance I should say, around the 1.584 mark, and tenuous support then around the 1.517 mark. Coupled with that was an ascending triangle. And the ascending triangle effectively shows, okay, upward resistance coupled with sequentially rising low prices, which can be indicative of supply and demand, such that when that pattern is disobeyed by the market, opportunities present themselves. I.e., if at this particular time the price continues to fall and plummet even the support point here, we could be looking for possible short positions. Now, to help us with that, we could look to the stochastic oscillator, because the stochastic might be a way to confirm that assumption with overbought or oversold convergence depending on where the market is going. Now let's take a look at Barclays, okay? And what we have here is the 100-day exponential moving average coupled, of course, with the bearish volume. The bearish volume took a huge spike here recently, okay? And we had almost a doji formation. It seems to be that for some traders, this is almost like an island reversal, okay? Now the very interesting thing about the island reversal is if that one is approaching the markets very, very smartly, they know where the retail traders will have their entries and stop losses, which would probably be about here and a stop loss below. So the smart counter retail trader might not take a position until the market retraces or bounces up, then retraces, and then look to counter retail trade when the stop losses are hit, hence sending the market downward. So I hope this has been of help, guys. If you have any further questions, do not hesitate to get in touch. We look forward to hearing from you. Welcome all inquiries. As we say here, keep learning. We'll catch you on Monday and have a great week.